incentives getting smaller, and that's a real dilemma. I can totally appreciate why there's a case for actually reducing the incentives, but do keep in mind that the private sector works on a different, on actually attractive incentives, and so that's a big issue that we face on a day-to-day basis. The second is that if we are talking about financial inclusion, then it becomes very important to expand and be expansive about distribution. You need to have multiple distribution channels. Some of it is your own, some of it is tie-up, some of it is partnerships, and so on. And the deeper you go into the country, the more important it becomes to actually to have small distributors who already are present there tie up with somebody. Again, if you look at the way things are progressing, actually the focus is on having fewer distributors, but of a certain scale. And I can speak from the life insurance industry, who can become a corporate agent, who can become a referral partner, who can become an individual agent. All that is becoming restrictive and going to continue to become so over time. So we ask ourselves the question, how are we going to build on financial inclusion when distribution is going to start becoming curtailed? The third dilemma, and I respond to one of the opening themes of this panel, is that the first common challenge is creation of a hybrid product for the last mile: banking, payments, pension, insurance, credit combined. And I'd like to say that I think the private sector operates on doing few things, doing them well, rather than trying to create a utopian product that covers everything else. That may happen, but it will take time. And I can just, the gentleman referred to combination products, which is life insurance and health insurance. They haven't taken off because it's very difficult to integrate. You can integrate at one level, you can have a common product for the customer, but when you get to the paperwork behind that goes in, you'll have different forms for life and different forms for non-life. So, just combining life and non-life is so hard. How will you actually go about combining this whole thing in a reasonable period? You may get there, but don't make that mandatory on day one. So that's really the third dilemma that I'd like to speak about. The fourth is around regulation, and the fact that regulation should be the framework in which regulation works in the entire country. Whoever be the regulator needs to foster the innovation and needs to have a certain clarity of purpose. And I think there's some work to be done over there. Even amongst on this table, there was a discussion of postal life insurance. Today, postal life insurance and private and the other life insurance industry are not regulated by the same body in a full manner. So there's one issue there. Regulations have to be clear on what is being regulated. Are you regulating the input or the output? As an example, if we talk of training, all agents need to go for training. Today, what is regulated is the 50 or 100 hours of training that an agent has to go through. The content is regulated, and also the output. Is the person going to clear an examination and so on? So I think we need to think through some of those. If you look at products, for example, there are many products in life insurance. All of you are familiar with unit link. There's the variable universal life, and there are many other products. Today, in a unit link product, every product in the marketplace is really a commodity, and so I think the whole regulatory body needs to think about the direction in which it's going and how that's going to actually encourage industry and private sector. The fifth point I want to talk to is specific to the last point that Ajay made about the crooks are rising to the top, and I agree, crooks are rising to the top, and I also share the frustration and the crisis of ethics that you're speaking about. But what I face on a day-to-day basis is basically a situation where